In today's video, I'm going to be sharing with you the top 2 stocks to keep in your watch list for tomorrow. We're also going to discuss the overall market to get you guys prepared, along with giving you guys an update on some of the stocks that I've mentioned in yesterday's video. Y'all, let's dive into the charts right off the bat. We got QQQ, and right now, again, this is the Nasdaq futures. So today, the market gave us a doji, which is quite unfortunate, but it does happen, all right? It's not uncommon for us to get a doji the day after big moves in the market have occurred. Okay. We're going to look at QQQ. And so far, the gap on the left started to get filled. We are already in the middle of it. All right, so it's only a matter of when. It's only a matter of time of when we're actually going to drop. It's going to drop. It's going to drop to 426. It's just how is it going to set up before dropping to 426? How many more dojis is it going to provide moving sideways before dropping to 426? These are the questions that you should be considering in regards to picking out your entries to capitalize on the move that is coming up. So far, I mean, the daily charts are bearish on all indices. As you can see right here, bears are still in control. If you look at DIA, which is the Dow Jones, the bears are definitely still in control on this one. All right, now we gotta look at the Russell. This one also, the bears are still bringing the stock down. It opened up lower. The price target for this one, like I said before, is at this level of support at $187. So keep your eyes out on it. The contracts on the indices are nice. Apart from DIA, this one, there aren't that many options, and the volume is actually much lower than the other three, like the SPY, QQQ, and the Russell. The volume on these contracts is a bit lower, and also the cost is kind of higher really, compared to like the other three. All right, so what I prefer when I choose to trade the indices are especially QQQ and SPY. Now, let's look at the first stock to keep in your watches for tomorrow. Now, that one is ABT. Abbott. All right. Now, I want to share this one with y'all because it has earnings tomorrow morning. And earnings tend to increase the volatility in the stock. Like the size of the candles tend to get massive. If you look at what happened here, for example, a lot of opportunity to make money in this candle compared to how it typically trades during the last days. All right, now looking at here, where is it going to go? There is a gap to worry about at the top between 119 and 115. All right, now at the bottom, let's see here. The only gap I see below is the one at $95. One of them have to get filled, and if I have to take a guess at which one is going to get filled first, I would say the bottom because of the current market conditions. A negative reaction to this earnings could affect not just the stock but other stocks in that same sector, and could also force the indices to come down a bit faster. So I expect I'm gonna lean bearish on this. Like I always tell you, holding anything through earnings is 150% gambling. The reaction is the reaction is very unpredictable. It's a surprise. It's gonna be a surprise for all of us. But what I want y'all to keep in mind is how it's going to open, because that is the key. That is the key. If we open up a little bit lower, let's say we open up at 106 or 105, what I want y'all to be on the lookout for is for something like this. Just the first 5-minute candle to be red with good volume, or something that looks like this, where we see a little pump fake to the top, either a doji like that, followed by slow movement, followed by this thing rolling over and producing an all-day fader all the way down. And by all the way down, I'm talking about like all the way down to 103, for example. All right, so just keep your eyes out for that type of movements if the reaction is negative. If it's positive, you can just flip the script on what I said and watch it for a move up here to 115. All right, so but it really, the first 5 minutes is key, and I think it's going to fall because I'm just bearish on everything. All right, now the second stock that y'all should be keeping in your watch list, that one is Walmart. And I want to share Walmart with y'all. It's looking kind of sloppy right now, but after sequences like this, there tend to be big moves, right? It's either going to happen tomorrow or it's going to happen the day after. It's been trading at $60.60, trying to break above it for quite some time. It just can't break above this level of resistance, right? It's been trying and it's been failing. Looking at the daily chart, we're gonna zoom in. And what I see, I don't know if y'all see it too, but what I see is a head and shoulders, which is a bearish chart structure. We got the head, no, we got the left shoulder right here. And then the head was made of a descending triangle, which I shared with you guys, and y'all made some money on it on the way down. All right, all the way down to 58. And now we got the right shoulder where this thing's popping up above where these short sellers are. We see some rejection. This is a dark cloud cover followed by more bearishness. We got a long wick on top of this candle. We got sellers preventing the stock from moving higher, and the candle is getting smaller as we're rolling over. All right, now the next thing to look for is for a big candle like this all the way down to 58 bucks. I think it's going to drop at least to the neckline, which is at around like 58.50 by Friday. If not by Friday, then by Monday, depending on how fast the indices and the Dow Jones collapse. All right, but the setup is there, the structure is there, so it's definitely worth keeping on watch. If you want, you can set an alert right below where individuals will be panicking. There are buyers located in this region right here, like right below 59.40. And when that price gets triggered, their stop losses is going to get hit, and it's going to cause that flush. But if you want to be a bit more alerted a bit before that, you can just move that up to right here. All right, but there would be no guaranteed if the price is actually going to go below it tomorrow. The day that it falls below 59.35 is the day that we could see a big flush. All right, and that day I don't know exactly when that will be, either tomorrow or Thursday. So that's why I'm kind of giving you guys these two outcomes to look for. Now the next one, the next stock that we're going to look at, I was tempted to, okay, there's the two stocks that I shared with y'all, but there's also this one right here, which is Shopify. The best time to share this structure with y'all would have been on 410. All right, but on 410 I was giving y'all other stuff that were making y'all money, so they're all falling, which is nice. Everybody's getting paid on puts. Okay, now I don't think it's done yet. I'm discussing it now because if again, if we were here, then yeah, I would tell y'all watch this for a major drop. But we're already down here, so it's really a complicated game at this point to play. This is the point where people who are shorting will be slowly taking their money off the table as the stock is moving in their direction, right? I think it's gonna drop a bit more. Number one, because I'm bearish on everything. All right. Number two, There's also a gap to fill on the left. If you look right here at 64. So this is the first gap to worry about. And I think it can make it. I definitely think it can make it. So keep your eyes on Shopify for that drop. All right. A move down here to $50 to $49 would be super aggressive. And it would be nice if we could see just a big, huge day where everything just collapses like that and bring Shopify down. I would be shocked to see it go down there, but it would be something to keep in mind. So keep the stock on your watch list. The quick updates. I shared with you guys Tesla. I think, yeah, I did share with you guys Tesla about how skeptical I was and how I believe that the stock is getting closer and closer to filling the gap on the left. That gap is at 145. Let me put that line again. Where is it at? That gap stretches from way back here. There it is. Way back here. And we're getting really close. And if we look at the 4 hour, there is a structure on there. Tomorrow, the stock might play games. Like, by games, I'm talking about just going sideways again. Just giving us another doji like it did. Alright. But it's looking like that. And support broke yesterday. And today, it gapped down and stayed at 157. Tomorrow, we might see a little pump fake up to 159 before we tumble some more and get down to 145 either by Friday or by Monday before the earnings report. If it gets there before the earnings report, it might be an earnings killer or an IV crush where nobody wins. Like the calls get demolished, the puts get annihilated, all of the contracts drop by like 80%, which will provide a nice opportunity for a day trade. And I believe by that time it will be to the long side, I believe. So that's my thoughts on all of these stocks, and that is the end of the video. Do not forget to annihilate the like button as always. Remember, I make these videos from Sunday to Thursday at exactly 10 p.m. Eastern time. Alright, so definitely click on that subscribe button and click on that notification bell. That way YouTube notifies you whenever I release these videos. If you'd like to be part of a private Discord community, we can get all of this information in real time as I see them. You can find that as the first link in the description of the video below. Don't forget to follow me on social media at Paul and Guma and at Patternology Lab on Instagram and on X. And lastly, to get some free stocks with Webull, you can use the third link in the description of the video below. Once again, ladies and gentlemen, this is Patternology Lab, where we treat patterns only. And I will see all of you in tomorrow night's video.